This episode is brought to you by Infuse, where agility meets scale, where compliance meets confidence, and where bold ideas become reality. Find the only place where card issuing and processing comes with happiness built in. The Infuse modular next-generation platform gives you exactly what you need, from bin sponsorship and scheme access to compliance and fraud prevention, while you stay in control of your customer experience and roadmap. Infuse, innovative card issuing and processing that fuels innovation. Discover more at infuse.com.
Finished training for the day? Time to fight post-workout fatigue with Core Power Protein Shakes. They're packed with 26 grams of high-quality protein to build muscle and electrolytes to help hydrate. The nutrition you need to help your body replenish, rebuild, and repair post-workout so you can power on to the next one. Champion your recovery with Core Power. Visit corepower.com to learn more.
I'm David Barton-Grimley, and on today's FinTech Insider from 11FS, we are talking about stablecoins. Yep, we're talking about those again, but for very good reason, because things are heating up. The global stablecoin market has jumped from 200 billion to 270 billion, so that's a 35% leap. And monthly transactions have exploded from 750 million to 1.3 billion. Now, that 1.3 billion figure is actually quite a significant milestone because, fun fact, that's about the same volume that Swift is doing every month. So that's pretty significant, right? So yeah, the tailwinds, then they're not just gusts, they're full-on gales. We've got regulatory clarity finally giving institutions the green light in some countries. Best practices are solidifying, and here's the kicker. Payments and trading use cases are actually making money now. So that's right, we've moved on from white papers and hype to some serious real-world revenue going on here. So today, in partnership with Fireblocks, we are getting practical. How do you actually operationalize stablecoin payments, right? So we're talking architecture, compliance, KPIs, and of course the gotchas that'll trip you up if you're not careful. So let's dive in. Firstly, we have someone who is very familiar with Fireblocks and the work that they're doing in this space, and that is Goldi, SVP of Payments and Network at Fireblocks. Welcome, Goldi. Tell us a little bit about yourself and your role at Fireblocks.
Yeah, thanks for having me. Great to be here. First time, by the way, on the FinTech Insider. I'm excited. So I guess a little bit about Fireblocks. You know, if you haven't met Fireblocks up until now, Fireblocks is probably the largest platform out there for any company, mostly financial institutions, to build their business for digital assets. So if you are a company like Nubank or Revolut, and you want to offer accounts to your users, or if you are a liquidity provider out there, or a payments company, or anyone else who really wants to start building on top of digital assets, just like stablecoins, then 70% of you are already using Fireblocks probably. And my role specifically is to make sure that, again, if there is a payments company out there and they have thought about this and they're making the right call and they want to get into digital assets, they want to work with stablecoins, they want to move money faster, it's my goal to make sure that they do that on Fireblocks. And my other hat is the network hat. So because we already serve more than 2,500 different financial institutions, again, those could be the banks, exchanges, trading desks, whatnot, my goal is to make sure that they're all connected. And by the way, we'll talk to some of those people on the show today. My goal is to make sure that if you are a payments company coming out of Europe and you want to work in Latin America, for example, then we can help you through our network to find the right partner, quickly work with them, and start expanding your business.
Awesome. Welcome to the pod, Goldi. And joining Goldi, we have a FinTech Insider debut for Anoosh Arevshatian, Chief Product Officer at Zodia Custody. Welcome to the show, Anoosh. Please tell us a little bit more about your role at Zodia Custody.
Good morning. Absolutely. Very happy to be here and looking forward to a spicy conversation if we can have one.
Let's do it.
Brilliant. I head up product over at Zodia. I'm the Chief Product Officer. What we do, as the name says on the tin, we're a digital asset custodian. globally situated. We are, I would say our big selling point is that we're bank bred DNA, bank bred in terms of what we do, how we offer it. I'm really excited to be here in terms of how we build on that utility, how we build on the network that Goldi just mentioned as well, and how we really think about solving real world problems for our clients. So excited to be here.
Awesome. It's great to have you. And completing our lineup, we have Lux Thiagarajah, Chief Commercial Officer at OpenPayd. Welcome to the show, Lux. Introduce yourself and tell us a little bit more about your work with OpenPayd, please.
Absolutely. Thank you again for having me. And yes, I am also a newbie to this, so it's fantastic to be here. So yeah, I work at OpenPayd. We are currently building what we like to call the universal financial infrastructure to help our clients move and manage money globally. We have over 1,000 institutional clients, and previously, we have predominantly been powering the payments, payments that is, for a number of institutions. So we have the digital asset vertical. So we have clients like Kraken, Ripple, B2C2, to your large exchanges, stablecoin issuers, or even market makers. But we also service different verticals like FIs, the CFD vertical as well. And we've recently, in conjunction with Fireblocks, which I'm sure we'll explore further, we're trying to bridge the gap now between the traditional banking and the new blockchain banking, and that's obviously via stablecoins. We're processing currently over about 150 billion a year in payments. So yeah, I am sadly responsible for the revenue number, so I will get blamed when we don't hit it, and I will get no gratitude when we do hit it. But no, lovely to be here and looking forward to a spicy conversation. Absolutely.
Amazing. It was great to have you all. And yes, I should repeat actually what you just said there. The three of you are working together. You're cooperating. You're part of this network that Goldi was talking about. And I think what's great of that is that you've each got different perspectives from different parts of the stack of how this whole thing comes together. And we're going to open the discussion by going back to that kind of big headline figure. It's growing like crazy. The volume is going crazy. Goldi, I want to come to you first. Where do you see the growth? Is it regional? Is it all still coming out of Latin America? I mean, that's been the story about stablecoins now for a while. What's powering this?
Yeah, that's a great question. I think, maybe before I start answering this question, just to talk about this panel right here, right? So we have Anoosh was mentioning that she's from Zodia Custody, which is a company, and Anoosh, I hope that's okay that me saying this is also obviously backed in a way by Standard Chartered, right? Which I think is remarkable that big banks, global systemically important banks understand that this is an important place to be, right? And then on the other side, we were talking about Lux and OpenPayd. OpenPayd has been a company that was, in a way, really revolutionary in the let's call that normal fiat world, and they've been helping a lot of businesses, that found it hard to establish the proper banking relationships, maybe globally. They were helping those businesses to expand, to create more revenue, and so forth, and are now making the switch. As Lux said, this is on him, right? Let's put it on him. Now making the switch to digital assets, and I think that those two companies are, some sort of a as you said, it's a tailwind. It just shows us how we're at a different place in the world. I've been doing this for close to a decade, right? And the fact that we now have a company that's backed by Standard Chartered and a company that has already been super successful in the world of fiat coming into this world, I think that already says something, right? So, and now let's go to your question. You said, what is driving this growth, right? So this growth is really driven, I think, by the grassroots. And I think that's how it is really in payments, right? I mean, I think stablecoins really found product market fit early on in trading. Great. That was like 14, 15, 16, let's say. This is, by the way, by the time they were just called fiat pegged assets. No one gave them that cool name, stablecoin, right? And later, as those trading users actually thought to themselves, hey, this is great, they started using it for other things. Today, obviously this takes time. Today, almost a decade maybe after the first stablecoins have found product market fit, specifically with businesses and individuals who found it hard to either gain access to a dollar or wanted to move funds faster. And the reason we're seeing growth specifically in the last, I want to say, 12 to 18 months is, I believe it's a few things, right? First of all, huge sentiment change in this space. It all started, obviously, you can go to 2024 and you can say, oh, actually, interestingly enough, the Bitcoin ETF was the one that brought this, digital asset world mainstream and helped push digital assets in general. But it was really the acquisition that Stripe did, one of the, largest PSPs of our world, bought this company called Bridge for $1.1 billion. I think that really made a lot of companies look at this and say, hey, maybe we should start enabling stablecoins as well. And then obviously as the Trump administration came in, changed the regulation really quickly, actually changed a lot of things. Obviously now appointed a crypto czar. Every industry needs a czar, right? So I think with that change, more and more companies are feeling more and more enabled to actually look into stablecoins. And this is why, and I don't know if you want to get into this later, the growth of USDC, by the way, recently has been actually faster than the growth of a different coin called USDT. That is probably the largest one. I think a lot of this is because the Western companies of the world in the US and Europe now feel that they can touch these type of assets. They're going to an asset that they feel maybe is a bit more regulated. So I think that's a big push.
Right.
And I think, again, all comes from the grassroots, from the people on the ground that want faster access to money.
So it's becoming institutionalized, more institutionalized with mainstream banks. And that's a good handover to you, Anoosh, with that institutional hat and background. Like, how are you, where is the growth? Where is the adoption for you?
Yeah, absolutely. As Goldi said, right, as you see from a regime change perspective and from a regulatory clarity side as well, the ripple impact that's had beyond the US as well, right? You've seen in the last few weeks as well in Australia itself, right? Quite I'd say a regime that takes its time in terms of forming specific requirements and making sure that those are fit for purpose for the market. There have been a couple of entities that have actually been approved there in terms of having their own issued stablecoins. So you're seeing the pace of change and almost if I can say, the FOMO impact as well across the markets and jurisdictions in terms of trying to get the right infrastructure in place, right? Whether that's infrastructure from a regulatory perspective, whether that's infrastructure as well in terms of the tools, right, that are needed. That goes to the wallet side, that goes to the custodian side, that goes as well in terms of all of the ancillary tools, right? Is the pricing data there? Are the compliance tooling, the blockchain tracing, etc., are they all there as well? So as Goldi's mentioned, what we've been seeing is a steady increase, right? Not just in terms of our existing clients, the trading firms, the hedge funds, the PSPs as well, but actually going into different client segments as well that perhaps 24 months ago, 36 months ago, we didn't have access to, right? And you're looking here in terms of specific use cases. You're looking here at trade finance, right? Which is, again, super rife for this type of activity and this type of value transfer at speed, at efficiency, right? And with this optimization. So I'm very bullish about this. I think it's just the beginning.
So as it becomes more institutionalized, some of those more complicated financial instruments can then be processed by stablecoin, like trade finance, you say, and treasury and all of that kind of stuff, which is super interesting. Lux, I want to go to you. Your perspective from OpenPayd, looking across the payments gamut. Where are you seeing stablecoin really take off?
Yeah, I think there's been a few things, right, that the guys have also already mentioned. So one, obviously, there was the regulatory clarity that MiCA and the Genius Act provided, which then obviously opens up to institutional demand. And I think, as Goldi said, I think someone like USDC benefits hugely from that, right? If you're an asset manager sitting in the US, which stablecoin are you going to want to mint to buy into a Bitcoin ETF? It's going to be Circle, right? It's going to be USDC, and they've grown phenomenally well in the last kind of 6-12 months. But then it's also what hasn't changed. Like if you look at over the last 18 to 24 months, there's probably been a decline in correspondent banking around the world, right? You've got end users in Asia, you've got end users in LATAM, you've got end users in Africa who can't get access to offshore dollar banking. They just don't have it because the correspondent banking network hasn't grown as much as it should have. I know that the G20 pledged by 2027, there will be, a faster, more a quicker route for banking and settlement, but we're not anywhere near Yeah. So why would they not trust a stablecoin? And so what you've suddenly seen is the shift of the use of stablecoins, which was just as collateral on trading venues like centralized exchanges, to actually a means of moving value across borders. And that move of that sudden surge in cross-border use case is really what we're seeing at OpenPayd. If I look at the verticals we serve, the biggest growth actually has been financial institutions, and it's because they're all adopting stablecoins. They are using stablecoins as a payment route in cross-border payment. You've got firms using it as a funding route. So previously, where for goods and services they were accepting euro, sterling, dollar, they now accept stablecoin as a funding route. So they now have stablecoin treasury they need to on and off ramp from. You're seeing that in the gaming sector, again, as a funding route. And I think that's the shift that we've only really started seeing. And it's just going to grow tenfold. And it's what we're seeing here at OpenPayd. It's really those use cases. And for me, what we finally got, and I'm not kind of boosting Goldi's ego, but we're finally seeing the ecosystem orchestration. And that's kind of what the Fireblocks network for payments does, right? What you're seeing is we've got proof that the technology works in blockchain. And what we now need is a key players in the ecosystem bringing the right players together. And kind of with Fireblocks' network for payments and that kind of thing, we're finally bringing everyone on the same map. And that really should turbocharge the use cases. So.
It's amazing. I want to read off some stats actually that support everything you're all saying. So in Latin America, it's still, I think, very much the lead, I would say, from what I can see here. Something like 71% of institutions in LATAM are using stablecoins for cross-border payments. In Europe, it is smaller, more measured, but more deliberate. So it's something like an 18% of institutions. We still see regulation as a bit of a barrier, so there is some growth there. But I want to pivot because you're all beginning to talk about infrastructure and institutional adoption, and I'd like to just sort of set a bit of a grounding here around like what do we mean by institutional? What does it mean for the banking infrastructure to take this on? So, Goldi, according to a report that you guys put out, something like 90% of financial institutions that you surveyed are already running or planning a stablecoin program. Like what is a stablecoin program? What does that look like?
Right, it's a good question. I mean, look, at the end of the day, it's great that more and more fintechs adopt stablecoins, and there's an app in Argentina that allows people to hold a dollar in the form of a stablecoin behind the scenes, maybe behind them knowing this. This is all amazing, but if we really want the global financial infrastructure to just move faster, right, and to allow for more sophisticated, let's call that schemes and other types of payment methods, I would say, they all need to adopt this. So the banks need to adopt stablecoins. So when we say a stablecoin program or be stablecoin ready or whatnot, we actually mean that the banks globally should start looking at this technology as another very valid payments rail. And this is exactly what it is. People, obviously stablecoins right now are super hyped, right? So it's important to remind people, stablecoins are faster, yes. It doesn't mean that they're necessarily cheaper, by the way. And because stablecoins are not, they're not magic. They're not the solve for any problem that we have in payments. They're not solving world hunger right now. They're allowing whoever is implementing them to use them as another payments rail to move money faster in some cases, and maybe at the same cost in some cases. And the real value comes, at this point in time at least, comes from the fact that they're so much faster that speed could actually create some economic value. So I'll talk to, I guess, one of the best use cases that we've seen, which is the importer-exporter use case. I know that Anoosh's Zodia custody is also playing part of those use cases as well. For example, where an importer can pay an exporter, let's say even $40 million if they need to, in a matter of 10 minutes, instead of doing a swift transfer between two countries that are not the US, which means there are several correspondent banks in the way, which means that necessarily this will take at least a day and a half, 2-3 days, right? When that happens, when that importer for the first time pays that exporter 40 million and it takes 10 minutes, that importer will never go back to pay with fiat. And when banks are finally understanding that they actually need to take part of this, they also need to create their own program and provide a stablecoin account where their at least business users can actually receive money and send money. Then finally, we will be able to say that this hits mainstream. And what I think will happen, by the way, once banks adopt this, and just internally, I will tell you, Fireblocks started the year with about 40 banks running on our platform. We're now at about 120. And so this year has really been like monumental in terms of how banks are looking at this. But I think that once banks start providing this infrastructure with stablecoins, then fintechs can build on top of that, and other types of apps can build on top of that. And then finally, we'll see this upgrade we're all waiting for.
Amazing. And Anoosh, so the bank role here is to provide the infrastructure, but also the custody. Where does custody sit within this flow?
Yeah, it's a really good question, right? Because there's one thing when you think about infrastructure, right, and providing these rails, and I completely agree, right? It's not as though suddenly stablecoins come around over the course of the past decade and they replace everything, right? There's very much a complementary flow, as Goldi said. There's very much it works in specific corridors and it makes sense, but also there may be some hidden interoperability costs to think about, right? And that's not just interoperability between chains, but also between off-chain and on-chain, right? All of the multiple intermediaries and that the gents have spoken about. When it comes to the custody side, here's where it gets a little bit tricky. If you think about the majority of the banks that are out there, right, they have to comply with Basel requirements, right? They cannot typically hold assets. If they do hold assets on balance sheet, you know what that results in? A massive capital penalty to them, right? So in terms of how you look at it, right, I think it's incredibly, incredibly important that banks do have a stablecoin strategy. I think what they need to do here is think about how are they enabling these end use cases, right? In addition to some internal use cases, but more so actually the end use cases. And I think the import-export example is a really good example of that, right? It's about making sure that the methods and the rails and all of the underlying foundational infrastructure is there, and it's there at scale, and it's there at performance, and it's there in a compliant manner as well.
Amazing. And I guess on-ramps and off-ramps, I suppose, are a really important part of that, right? Because if you don't have access back into the dollar quickly, then it's going to be difficult to convert out, right?
It is. And one of the areas as well, and I think it's really good that that Goldi pointed it out. So as you said, those are areas of cost, right? You can only incur that cost if it makes sense, if it's got economic value, either through the speed of the settlement or through the overall cost of the transaction as well, right? And I think this is where it's getting quite interesting when you look at specific programs that may be out there as well, right? And one of the things that we do, again, working with Fireblocks, working with major stablecoin issuers as well, is thinking about how do we look at this and how do we incentivize usage? How do we incentivize these rails being used such that the prohibitive costs of, let's say, custody, they aren't involved there, right? And I think you're going to see more and more of that kind of value transfer, I would say, where you see more of an incentive towards making this kind of infrastructure much more accessible as well to remove those disincentives.
Awesome. And Lux, how are you seeing your customers, utilize these rails and bring on stable coins in the mix of all the other different types of payments that they can accept and use?
Yeah, I mean, we're seeing it. I'll be honest; it really depends which vertical we look at, and really
Right.
kind of their strategy. Like, from a trading company or a trading shop just doing on and off ramping, that's the most simple use case that we all sort of know very, very well in this space. But we're seeing it more in payroll, which is something new, right? Which is a great thing when you think about these large global organizations who have got employees all around the world and they have to make their end of month payroll. Why use Swift when it takes 2-3 days and there's hidden correspondent banking costs, when you can do it via stablecoins and it's there within minutes, and the costs are very visible. We're seeing it definitely in remittance. We know how big the remittance market is, and when we think about what the costs of remittance costs for $200 they've actually gone up since 2023, which seems completely anti-illogical when we think about where banking and payments have got to. But yet, for someone to send $200 back home, the costs have gone higher. For me, that's really been two of the big use cases that we are seeing. And really, it's then a function of, I guess, macroeconomic events. As a previous FX trader in my previous life, you look at certain currency volatility. You look at 1 year vol on Turkish lira. Why would you feel comfortable holding local currency in Turkey when it's probably vol is around 15, when you could hold USDC, USDT, RLUSD, whatever it may be, and any kind of dollar-backed stablecoin? It's that kind of use case we're seeing. And as our clients really become more global, and a lot of the institutions we have at OpenPayd aren't just a European entity with European clients, it's usually a European firm with clients all around the world. It really comes back down to that underbanked population that's out there. So we've got a European client who have got clients in the Philippines, in Cambodia, in Indonesia, or we've got them in Mexico, and they want to send dollars in to buy goods and services. That's where stablecoins come in. It comes in as a payment route. And as kind of Goldi mentioned, that's really been the key shift for us, is that blockchain is now a payment route. And that's where we're seeing the biggest shift on our client base.
And I want to say something else. And, Lux, you reminded me of this actually. Actually, two things. One, you mentioned Turkey. Turkey's super interesting because right now, the most common use of dollars in Turkey is actually USDT. You can actually, if you go and spend some time in Turkey right now, you'll see that people are paying with a stable coin literally to just buy coffee, which is amazing. The second thing is, this is something, Lux is our, I guess, Lux is the industry's FX expert. This is how I look at him, at least. And he mentioned Turkey and the volatile currency. A good example for how stablecoins could, in a way, bring us to an easier world is there's already a stablecoin called by lira, right? That's actually a Turkish lira stablecoin. So even imagine that you still need, David, maybe you still need to hold Turkish lira for some reason, right? But then, just what Lux was pointing out, maybe then you decide that, for the weekend, I want to hold that in dollars, or maybe mid the weekend, you actually want to turn that into dollars. With the current system, you cannot. But if you're holding a stable coin that's a Turkish lira, you could actually do, and again, I don't want to give too many complex notions here to the audience, but with a Turkish lira-based stable coin, you could actually do what we call on-chain FX and change that to a USD stable coin during the weekend. Something that you could not have done probably today with, your fiat currencies. And I think, I always go back. This is what we want for the future. We, the people on this podcast right now, we're not Bitcoin maximalists, or maybe we are, but it doesn't matter. That's not what we're talking about. We're all about how are we upgrading the financial ecosystem so that businesses and users could do more, just like the communication infrastructure has been updated. We're still making phone calls, but now we can do video calls and conference calls and whatnot. That's how I think we're all looking at it here.
Yeah. That's a wonderful way of framing it, Goldi. And I should say the weekend stuff is very important, right? Because if you're running a global treasury operation, it's the weekend that kind of stuffs you up, right? So all of that after hours trading and weekend stuff is extremely important. Just on that note, we're going to take a quick pause here for a break, but don't go anywhere, as we'll be diving even deeper into stablecoin adoption with our excellent, amazing panel here after the break.
The family that vacations together stays together. At least, that was the plan. Except now, the dastardly desk clerk is saying he can't confirm your connecting rooms.
Wait, what?
That's right, ma'am. You have rooms 201 and 709.
No, we cannot be 5 floors away from our kids.
The doors have double locks. They'll be fine.
When you want connecting rooms confirmed before you arrive, it matters where you stay.
Welcome to Hilton. I see your connecting rooms are already confirmed.
Hilton, for the stay.
In today's fast-changing digital world, proving your company is trustworthy isn't just important for growth, it's essential. And that's why Vanta is here. Vanta helps companies of all sizes get compliant fast and stay that way with industry-leading AI, automation, and continuous monitoring. So whether you're a startup tackling your first SOC 2 or ISO 27001 or an enterprise manager vendor risk, Vanta's trust management platform makes it quicker, easier, and more scalable. Vanta also helps you complete security questionnaires up to 5 times faster so you can win bigger deals sooner. The results? According to a recent IDC study, Vanta customers slash over $500,000 a year in costs and are 3 times more productive. Establishing trust isn't optional. Vanta makes it automatic. Visit vanta.com/insider to sign up for a free demo today. That's vanta.com/insider. All right. Welcome back to part 2 of our deep dive into stablecoins. So in the first half, we talked about the why, what's driving adoption, where it's happening, how attitudes are shifting. And we already started to talk a little bit about the nuts and bolts of actually making stablecoin payments work at scale. And what we're going to do in this final part of the podcast is go into a little bit more detail and also talk about some of the things that still need to happen, right? Some of the contra flows. And so Goldi, I want to come to you first. So like I said, we've super positive. It's amazing. There's lots of adoption. But how far have we actually come? What's missing?
Yeah, so how far we've come, that's a good question because, if you zoom out and, I said this in the beginning, I've been doing this for almost a decade now. And even just in Fireblocks, about 5 years ago, stablecoins were probably less than, 5-10% of our flows. Today, where we process this year, by the way, $5 trillion a year. Today, it will be 55% of our flows, right? So that will be stablecoins overall. So a bit more than obviously $2.6, $2.7 trillion that we would process for our clients would be stablecoins. Half of that would be actual payments, right? So let's say $1.3 trillion worth of stablecoin payments a year. Now it's still minuscule, right? Because global money movement is, well over 100 trillion a year. It's still, less than 2%, but it's way bigger than what we've had up until now. But I think you wanted to also talk about, the hurdles, right? Where do we see things that are still not happening? And actually, maybe Anoosh and Lux can help me out here. I think that the 2 major hurdles, I think one of them is the one that we talked about in the first part, which is actually FX, right? Because today, FX is done at the friction point between a stablecoin, which is usually dollar denominated, to a local rail, which let's say Mexican peso, for example. And the providers of that FX today are crypto venues, let's call them crypto native venues. Those could be exchanges or on and off ramps. But these are still mostly, and hopefully this will change. I'd love to hear what Lux is thinking about this, but it's still not major banks, right, that are connected to ECNs, that gets the best, rates out there. And I think that's one hurdle that we want to go past. The second one, and that's probably more to Anoosh's clients actually, is privacy. Because with all due respect to the speed, no one wants their transactions openly broadcasted out there, right? And I'm sure that most of the clients that use Zodia custody, for example, are right now have this in mind, hoping that our industry will solve that. So I think those are the 2 things I'm thinking about. I don't know. What about you guys?
Go for it, guys. Who wants to dive in?
Yeah, I mean, look, I think if you I think you could even ask it to me now. I think if you'd asked me when stablecoins first came up, what was the most obvious use case for stablecoins? I'm sorry, it is just FX. You're looking at a market that is a 2 trillion a day spot market, and you're looking at pairs like dollar yen, which are a T+2 settlement. It is mind blowing. It is the year 2025, and we're talking about a T+2 settlement. For the life of me, it just baffles my mind. It is still the most liquid financial market in the world, which is FX spot. It always will be, and has been, and always will be. And stablecoins is the most obvious use case for that. And I know that Cumberland and actually Zodia Markets did I think it was a USD AUD on-chain. It was Zodia Markets and Cumberland, who did a Aussie dollar trade, and they settled it within an hour. I think it was within half an hour. That is at best a T+2 settlement. You look at, and it's interesting because if I look at TradFi markets, since the meme stock craze, they actually made equity settlements T+1 as a mandatory thing to protect the equity markets against another GameStop, etc. If you think about what that actually means, it gives the FX desks at bank less time to get the FX hedging based on equity settlement. So you've now actually shortened the window. What does that mean? That means bigger operational costs for the banks. It means less liquidity to trade. Why not use stablecoins? That's where the masses, that's where the traditional markets or the institutional players should be using the most obvious use case and bringing that on chain. I think where the stablecoin market now has to catch up is stablecoin dollars are 99.9%. It's dollars, right? We all know that. If you look at global trade, if you look at the FX market, dollar is not that dominant. I think dollar accounts for about 78% of FX as one of the legs, which means that whilst dollar stablecoins is in a great position, and we all know who the leading ones are, you now need to see the euro stablecoins, the sterling stablecoins take adoption. And I really think FX needs to drive that because there is an absolute use case for it.
Anoosh.
Yeah, as they've both said, right, as you look at this, I think some of the most important factors and facets are looking at where are you going to get the right participants involved in this network, right? As we've said, it's great that we can do it in a couple of corridors, right? It's like, how do we actually build this overall seamless, unified experience, right? Whereby you're getting entities that perhaps may not be as crypto familiar, right, or digital asset familiar, and you're trying to put things into perspective to them such that they can execute these transactions without potentially, let's say, holding ETH, right? They may not know exactly how to access that, how to use that, how to initiate transactions, right? And it's thinking about how do you bring this Web3 ecosystem over to a more Web2, or if I can say Web1, a traditional type of settings and systems. And as you think about it, I think these problems of privacy, right? That is, I'd say, the latest theme that the industry has been trying to solve, and through various different iterations, right? You're seeing chains such as the Canton network, right, coming up and essentially promoting quite a lot of this tokenization on chain, be that of stables, be that of tokenized funds or other asset classes as well, and it's all pushing this concept of privacy, right, or composable privacy, such that you can put it in place and ensure that where there are these, I'd say, these sensitive transactions, that you could do so at speed, at scale, knowing that at the same time it is also secure, right? I think as all of this does get resolved, one of the biggest things that we still need to think about is, again, as Goldi has mentioned, just trying to bring together the network and making it super simple for them. We're not going to solve overnight, right, the problem of correspondent banking, getting bank accounts in specific countries and making sure that every single corridor is then subsequently covered and filled. And I think this is where the industry really needs to keep pushing, keep having local, global partnerships, right, and truly adding in to add this liquidity.
Listening to all of you speak, it sounds both extraordinarily exciting, but also incredibly complicated in some ways. And this raises the question in the spectrum of interoperability. I mean, I think about it from a business's perspective. Say I'm a treasurer and, I'm running all this infrastructure with kind of fiat FX. And now all of a sudden I've got this amazing opportunity with stablecoin, and I've got to bring on stablecoin infrastructure, and I've kind of got to run that in parallel. And then, do I have the resources to do that? Like, how do we think about maybe standardizing some of this? I mean, is maybe that the big exam question almost, Goldi, for the industry, is to simplify and to standardize and to integrate? Does it come down to integration?
Yeah. So I think, look, if you're a treasurer, you shouldn't be thinking about how you integrate the technology. You need to think about how you're integrating the solution. And then I think you should go to a company like OpenPayd, for example, right? And this is where, this is really interesting. A lot of people are looking at this technology and they're thinking, oh, this is probably very accessible because everyone can connect to the blockchain. Yes, of course. But we still need companies like OpenPayd that are bringing stablecoin liquidity and merging that with fiat liquidity and giving treasurers globally the right interface to actually work with both and do the proper reconciliation, etc. The same reason why we have Zodia custody, that we need those type of companies, because yes, of course, opening a wallet on the blockchain is easy. Securing it is a whole different thing in a regulated manner, right? And you talked about interoperability. We are at a place in time where I'll be the first to admit, unfortunately, too many people think to themselves, should I issue another stablecoin? Should I issue my own stablecoin? And unfortunately, most of these answers are yes today. And I think that, you'll probably hear this from all three of us here. We would probably be the first ones to say to a bank or to whatever fintech, if you're thinking about issuing a stablecoin, please don't. We have enough USD based stablecoins. If there's an internal need for it and there's good justification on why you're moving money quickly, nostro vostro type of scenarios, great. Yes, sure. Issue a coin, doesn't matter. It's an internal ledger. But we don't need another dollar stablecoin. We do need more interoperability. And I think that what we're trying to push specifically as Fireblocks, because a lot of those people come and tell us, we do want to issue a coin. Maybe it's not dollar. Maybe like Alex said, maybe it's I don't know, a different type of European-based maybe or Latin America stablecoin. We do, using our platform, try to tell them, hey, do this in a way that it's interoperable so that in the future, your Mexican peso stablecoin could work even with a Brazilian real stablecoin, and you could just swap them out, ever so easily. And because we don't want to get to this place like in the, you remember how it was in the late 1800s, right? You were there. I'm kidding. But
totally.
Yeah, but we all read about this, how there were hundreds of banks, all with different dollar notes. And then, they created a Fed and so forth. So we don't want to go there. So we do need interoperability. I want to say one last thing that actually, it's sort of like, it relates to privacy, but it's a bit different, that we're still missing in this world. And I think we're going to get there hopefully in 26, 27, and that's identity. And that's because when I talk to probably any other payments company or a bank, they still ask a very valid question, which is, Goldi, can you guys, whether you're Zodia or OpenPayd or Fireblocks, can you ensure that when I send a transaction to a wallet, that's actually that person on the other side and not a random address that maybe is that person? From a probabilistic standpoint, they want deterministically to know this. And this is what enables fiat today, right? The ability to exchange that information. So I think that we're still missing that. There's a lot of, Fireblocks is working on this, of course, with our network, and there's a lot of other people doing this as well. I think that's another one of those pieces that we need to bring in as well.
Yeah, and Anoosh and Lux, what solves that problem? Is it regulation? So, I mean, we've Genius and we've got Micah and everything like that. Is it the next step of regulation? Is it tech? What is that?
I mean, from my perspective, right, sometimes regulation can, obviously the clarity can help. In other cases, as we're seeing in the UK, right, proposed caps in terms of how much one can hold, right, it could be a hindrance, right? So I think that comes with its positives and negatives. I think the thing that will truly move the dial, right, is when we stop thinking in silos, right? My business does this, the other business does this, the other business does that, right? And in each of them covering a specific part of that value chain or life cycle, right? Of on and off ramping and essentially on-chain FX, right? And it's thinking about actually how does this all fit together, right? Custodians unite, custodians and wallet providers, exactly like what we're doing with Fireblocks, right? Unite. How does that link into Lux's world, right? How do you enable a seamless on-ramp, right? How do you enable as well, just as part of this, a seamless connectivity to other sources of values, right? Whether that be crypto exchanges, whether that be DEXs, whether that be other rails as well, right? It's about bringing it together in a seamless way. And I think we all have, it's great to see that we're making progress here. And it's great to see, again, with all that we have on the call as well, taking the first strides to doing that. But we need to see that at scale, and we need to see that thoroughly implemented.
Yeah, I mean, look, I'm going to sound like a parrot here, but and I'm going to sound like I'm getting paid by Fireblocks to plug them, which I'm definitely not, for the record. But look, it's kind of what I touched upon earlier, and to agree with Anoosh 100%. I think we all have our part to play in this ecosystem, right? We at OpenPayd, we can take care of the fiat. We've also got the stablecoin that we can on and off ramp, but you've then got Fireblocks and their network, but crucially, for any clients who touch stablecoins with us, they're going to need a good custody offering, and there's not many better than Zodia, right? You look at the banks who are backing them and driving them as well. Like, there is no better name for a tier 1 institution to go and have custody services than Zodia. We will take care of the hard work between the three of us on this call, right? Through APIs, through us integrating with Fireblocks, through us integrating with Zodia. That is not the end client's problem. As Goldi rightly said, they've just got to figure out, where does blockchain and stablecoins and crypto fit in their business model, and how do they want to utilize it? That's where stuff like the Fireblocks network for payments comes in. That's the orchestration layer that the market needs, because between Anoosh, between me at OpenPayd and Goldi's network, we are doing really the heavy lifting behind the scenes, and we will plug it in so it's one integration and off you go. And between the three of us, you've got seamless fiat rails, you've got wallets, you've got bank grade custody. What else do you need? All you need to do is understand how you're going to use the blockchain technology. So for me, I think the regulation, I agree, sometimes it can make it clearer, sometimes it can be hurdles, especially if it's fragmented. I think regulation is good if they're all on the same page. If suddenly the UK has very different to MiCA and Genius Act, it becomes tougher. But for me, it's really, we now all need to work together, as Anoosh said, and not in silos. And that's going to be the big push for me.
And I'd like to, in the kind of closing few minutes of the discussion, take a bit of a meta view, take a step back and look in the next sort of 5, 10, 15 years into the future, and talk about what each of you think the kind of the end game is here. What is this leading to? I mean, Goldi, you said yeah, growth is amazing. It's still a drop in the ocean. You can kind of see how obvious these use cases are. You kind of have other forces as well, right? There's this Bitcoin maximalism, as you were talking about, in the crypto, and there's still the fact that the world economy is based on fiat. Where does this lead to?
Yeah, so I'm willing to bet all of Lux's money that, 20 years from now, I'm sorry, I just don't have as much as Lux, but no, I'm kidding. But the 20 years from now, probably, I want to think that, 80% of the global rails would have already been upgraded, because it takes time. I don't know if you know this, but an average banking system lives with a bank for 27 years. That is a remarkable figure. And just to replace those platforms would take time. But assuming, in the next decade, most of the large ecosystem in the world of financial ecosystem would upgrade to this platform, we would be able to do so many amazing things, like moving not just money faster, but collateral faster, do FX faster, have programmable money that we haven't even touched this, on this podcast, that you could actually write code into money. So I think where the puck is going is, it's very simple. We don't need to make such a fuss about it. Just making things more seamless, faster, and have more possibilities. If you think about, or maybe if you're asking, will this industry continue at this pace? I will be very honest to say that it really depends on the regulators. As much as we all want to think that it's just, the technology needs to evolve and all that. Yes, of course it does. But you can, just by looking at the last 18 months, when regulators decide that they're moving forward, like MiCA in Europe, or the Genius Act, or the MAS in Singapore, Vera in the UAE, whatnot, when they decide that they're happy for it to move forward, then there's a lot of financial institutions that just come after that, and that pushes even the tech players forward. So I'm hoping that we will continue on this trend, because if this industry has grown 30% in the last, just 6-8 months from 200 billion to 270 billion, we could probably double that number next year if we continue
Wow.
with the tailwinds we're having right now.
Anoosh, what's your bet?
I would say very similar. I'm very bullish about this. It depends on the time horizon, right? If you're looking next 5 years, I mean, you'll see more and more adoption, right? As we, again, as we've said, as the three of us, as our types of entities abstract away these problems and make things super clear, super simple for users, you'll see more and more uptake. You'll see more and more of a preference towards actually using these types of rails. I don't think in the next 5 years it's going to be a total replacement, right? You think about your tools such as like I'm thinking Pix in Brazil, I'm thinking M-Pesa in Kenya. I'm from Zimbabwe. It's not quite a stable coin, but we've got our own gold-backed asset reference token there as well, right? I don't think that necessarily those are going to be entirely eliminated, right? You think about what is working right now. Is there a need to change it, right? Only if there is actually a value add, be that in timing, be that in cost, or any other kind of optimization, will we essentially move towards one single rail. I think for the foreseeable, we're talking about adding really powerful tools that become preferential tools in the toolkit, as opposed to, let's say, throw away everything we know already today. It's not needed anymore.
Yeah, love that. That makes sense. Lux, to you for the final word. And to be clear, you can just bet a beer or a coffee, or everything. Put everything on the line.
I'm giving you all my equity, Lux. You can use that.
For the record, I don't have enough money to buy a beer. I want that on public record. Look, I think for me, I agree with Anoosh. I don't think we're going to see this. We're not maximalists here, where we think it's now going to replace the dollar, etc. There's going to be this one single currency. It's going to be that's not. It's 100% for me also that what are the use cases, and that's where stablecoins come into. I feel like I've been parroting it. FX to me needs to be solved. But it just does. It's that problem is going to be here in 5, 10, 15, 20 years. So for me, that's where I think we will eventually move into, because that's where traditional institutions have a need. The likes of JP Morgan hate it, right? It's the collateral they have to post, the funding costs of having to move money. That's where clearly stablecoins can come in. So I think we will start looking into that space and start fixing real world problems for those kind of institutions. I also think we'll continue to see issues with correspondent banking. I think banks move slowly is the reality we've all seen. We know that the Silvergate signature issues they had, they're only really now starting to get a little bit more open to crypto. It's been years. And, blockchain moves at light speed. TradFi doesn't. And that's the reality. So I think banks will be slow. So I think whilst we'd all love to see the banks come to the table quickly, I think the reality is they can't and they won't. But I think they will start slowly opening up. But for me, I think the biggest sort of use cases are still lack of correspondent banking and dollar banking offshore. And I think stablecoins will continue to grow significantly into that. And we will start, hopefully, and I will bet some money on that, we'll start making headway onto on-chain FX.
Amazing. That's a great note to end it with, that bullseye of T+2, trying to shoot that down to real time. It's a great way of framing it. And on that note, that wraps up today's discussion. I'm sure we could just keep going on for hours and hours. But thank you so much, everyone, for joining me. Where can people find out more about you all? Let's start with you, Goldi.
So please find us at obviously fireblocks.com, but also find me personally if you want on X at Goldi or LinkedIn at Goldi.
Awesome. And Anoosh?
Absolutely. You can find out more at zodiacustody.com, or you can find me on LinkedIn. I keep my X to things like music and football, which I'm a crazy fan of.
Amazing. Very cool. And Lux?
Sure. You can find out a lot more about us at OpenPayd.com. We have all our API docs and all information. I am on LinkedIn as well. If you see me on any other dating apps, it's all fake profiles, so please ignore them and do not try and contact me on those.
Because it'll just be some kind of generated synth of you.
Deepfakes are getting good these days.
Yeah.
I'm just telling you, they're going to be catfished. They're going to be catfished, so do not be responding to any profiles with my likeness on that.
I will echo that note. Do not interact with any synth version of me. Although I'm sure I'm so popular, loads of people are making synths of me online. You can find me boringly on LinkedIn, and that's me posting, not a synth for now, until I digital twin myself and then just sit on a beach somewhere. Thanks everyone for joining, and thank you everyone, our wonderful listeners, for listening. If you like what you've heard, follow our podcast and don't forget to leave us a review. It helps us to make it better and helps others find the show. As always, if you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider, or email podcast@11fs.com. Thanks very much and goodbye. In today's fast-changing digital world, proving your company is trustworthy isn't just important for growth, it's essential. And that's why Vanta is here. Vanta helps companies of all sizes get compliant fast and stay that way with industry-leading AI, automation, and continuous monitoring. So whether you're a startup tackling your first SOC 2 or ISO 27001 or an enterprise manager vendor risk, Vanta's trust management platform makes it quicker, easier, and more scalable. Vanta also helps you complete security questionnaires up to 5 times faster, so you can win bigger deals sooner. The results? According to a recent IDC study, Vanta customers slash over $500,000 a year in costs and are 3 times more productive. Establishing trust isn't optional. Vanta makes it automatic. Visit vanta.com/insider to sign up for a free demo today. That's VANTA.com/insider.